Hey traders, welcome to the double shot. It is the 4th of January here, so let's begin taking a look at a few charts. Tomorrow, it is Friday, we're going to get the jobs report, so there'll be a little bit of volatility with that. And then also we're getting, from what I've been reading on social media here, that there could be an ETF approval tomorrow on Bitcoin. We'll see what their reaction is, and we'll touch on that here shortly in the video. But I wanted to start quickly with UNG. This is natural gas. These ETFs are always a little bit kind of problematic when you look at them. They have a bunch of decay and stuff like that, so it's not really the kind of the best vehicle. You can also look at futures, but they're fairly similar counts. But that's kind of what today was a pretty big rally in natural gas, upwards of at some point I think it was up 6%. But it's a beautiful decline here. 1 2 1 2 3 4 5 4 and 5. I mean, you couldn't really ask for kind of for a better Elliott wave pattern in here. And whatever is going to happen in 2024, it's likely going to be some type of an ABC correction upwards. And the first targets would be back towards 8, and then maybe a little bit of a pullback, and then probably higher once again, maybe towards this zone, maybe near 10. I don't think we're going to be correcting, although you never know, but I don't think we're going to be correcting anywhere near 50%. I'll be pleasantly surprised if we do. I'll continue to try to stay long natural gas here after this move, but an obvious target here again, it's 8, and then probably somewhere around 980, maybe even $12. So that's natural gas really quickly. Then let's touch on the markets. I just kind of finished writing up the daily drip, so you can go ahead and check that for my thoughts every single day on that. I'll probably end up putting this video on YouTube as well, so not just for the members. But I haven't done one, I think, since December, middle of December. But anyway, it looks like we have a completed sequence here in the S&P 500, and it seems to be followed by, a decent correction. Now, we've been, there was a lot of talk about the Santa rally and how that's going to kind of try to push the markets higher. But I think that's been pulled forward, during the month of November and, half of December. And then we kind of starting to, have a little bit less power kind of climbing. And, for the past several days in here since the beginning of the year, we've had a pretty decent sell-off. We basically overtook today this 46.97, and I think there's more to go towards 4600 are my first targets. But you can also expect, especially if you get a little bit of a bounce from the NFP, that if you climb back above 47.30, 47.28, it could be an ABC, and then followed by another third wave lower, or maybe a C wave, and that becomes a W. However, I think this correction is going to have a little more to go than just, a few days here in the beginning of the month. It's probably going to extend all the way down to February, not even March. But that's the idea here after, a very strong rally since the end of October here. So that's the S&P 500. Let's quickly touch on the Nasdaq, which, has also, let me go back here. It also, sold off pretty well. And, we're touching these targets. I talked about this in previous posting and videos. 16,166 is the first one, which should be, reaching fairly soon. This does seem like it's a 5-wave move that's probably near completion, and then we're probably going to get a bit of a rally and then another leg lower. This rally in here, was a little bit tricky, and it kind of fooled us a little bit, because I had the wave 3 here, 4 and 5, and then it dropped, and then, I thought that maybe that's the start of a correction, and then, it pushed higher one more time in this, what looks to be, I don't even know if it's a diagonal, but anyway, it was a kind of a slow grind higher with losing momentum, and 100% beautiful equality again between this kind of wave 5 and wave 1. If you look at the daily, I mean, literally this wave here, it's perfect on equality with this guy. So, can make this stuff up, and it was a nice reaction here, and we'll continue to kind of look for a little bit of a downside, because you can see the dollar is also reacting from support, and the yields are starting to push back higher. So I mean, listen, I'm bullish on the market after we're going to get this kind of correction through, and but that's going to be probably early spring, and then we'll probably start to kind of move back higher. I mean, it's hard to be, bullish. I mean, look at the Magnificent Seven; they're struggling. Look at Apple; that's losing a little bit of ground. You can see the chart in the report, and I put some on Twitter as well. But those stocks haven't been acting well, and they're not acting that well. So, more of a reason to be kind of cautious here. So, once again in the Nasdaq, that's kind of what let me just delete this. That's kind of what I'm looking for near term. Just a little bit of a test of this level and a little bit of a bounce, and then once again we'll see if this is going to be an ABC, a WX, and then a little bit more. But that's kind of how it starts, and we'll take it kind of one step at a time. And then if you take a look at the Russell, I had a couple of counts in here. Let me see where this guy is. It's right here. With the 1, 2, 3, 4, 5, it was one of the things we were watching, and I still think this might have some relevance still. Although when I look at the rest of the indices, it does look like maybe we're already begun this kind of wave 2 correction, as you can kind of see it in here. This is labeled 1, 2, 3, triangle 4, and then you go in a kind of a final thrust higher in this larger fifth wave through a 1, 2, 1, 2, 3, 4, 5, 4, 5, and you're done, and you're beginning an ABC, at least to 38.2, if not even 50% by the time this is all over, and then you start to move again. And you can see, I mean, that could last very well until February, March. So we'll continue to kind of monitor how that goes going forward. So that's the Russell. Pretty decent failure. If you look here, I talked about this in the yesterday note. Right there, right? There was something that there was an attempt to break or to move higher here, right? This was kind of the first sort of a failed move, although at the time it was kind of early into this consolidation. Then we spent a good amount of time moving sideways, not doing a whole lot, having a couple of attempts that were rejected. Then we tried to break lower, failed there as well. I mean, this was just a messy old chop, and then a beautiful rally here at the end of the month. I mean, most of the gains in the Russell were made in this couple of months for last year, and then we failed again, and now we're back below. So what is one to do with this information? We'll see if they, if it's going to come back here towards 150, those could offer opportunities. 150 moving average, in a three-wave move, and then a breakout back above 2K, that would unleash probably a much larger rally higher on the count that's an A, B down in C, and then you can move to the upside. So Dow Jones Industrial, again, it's the second day they were closing below the 9-day moving average. For me, that's a pretty good hint that this trend is over, and we're going to be looking for a pretty decent correction, first into 37 and then into 36. With the counts looking kind of like this, right? You have a final move here in a wave 5 off a wave 1, then you're doing a 1, maybe a flat in 2 here, and then we could be starting to push lower, and then those targets are, you can see there's a couple of them, right? You have the all-time highs here, so 37K would be the first one, and then if we break, then you're looking at about 36K. So there's plenty to go in the Dow Jones, which reacted, from an inverse fib at 161.8, the reverse fib of this decline. It's right there. And there were a couple of other measurements we've done, and that I think that's gonna end up being the top, or very, very soon. Even if you make one more high for whatever reason, we're so stretched that this is, I think, bound to happen here in Dow Jones. And then, what else can happen today? You've had, obviously, Bitcoin rallying. I'll talk about that. VIX continues to be pretty bouncy and pretty jittery here, near 14. There was a little bit of rally in agriculture, and looks like something in Europe, but then China lost a bunch. So anyway, that's that's kind of a wrap up of these markets. Let's quickly touch on Bitcoin, and I'm gonna go here as well. So my main count is this guy right here. Let me see if I can pull it off. Yes, that we are already kind of completed on this rally higher. Let me go to a 12-hour, maybe we can see that better, right? So from these lows, we kind of climbed 1, 2, 1, 2, and then you have a larger third wave in here with a kind of a messy triangle here in the fourth wave. Then you push higher, then another messy consolidation with the final thrust into 45,925. That's the top of the wave 1, so wave 5. And now we should be getting a correction here back towards the middle of the channel, first the middle line, and then eventually maybe all the way back here towards 36K. So that's kind of what I'm thinking, and that's kind of my preferred move at the moment. So yesterday's sell-off, or a couple of days ago, and then we recovered, I don't know, maybe 75% of that, and I think this is probably a fade, and we're probably gonna push lower. I mean, a lot will have to do with the reaction on the ETF and all of that, but there's no real way of knowing. But if you're starting to crack back about 46, 45, 925, then the backup plan is this guy, and then you're probably going to go all the way up to 50K, 49, 922, where discount changes a little bit, still in a 1, 2, 1, 2, but you have a wave 3 here with the minute finishing all the way up. This is maybe an A, B, maybe a flat in 4 with the drop. And then, you're doing a 1, 2, 3, 4, 5, and you're pushing towards that equality between this wave 3 for now, right? It could be a wave 1, but let's just call it a wave 3. But you would have equality 100% with this move at about 49,922. You also have some, it looks like February 1st, 2024, you would have about 100% time equality between these guys as well. So sometimes we throw time fibs in there. It's just to kind of give us an idea of kind of how this works. But some of the cycle work, I do suggest that we will be entering a period of weakness. So let's see what happens tomorrow. But yeah, thanks for watching, guys. That's kind of all I have for today. So go ahead and read, today's piece and, all the updates here. These are free, this daily drip, the videos and some of the trades we take and the other information, it's not. But, this gives you a pretty good idea of kind of what I'm thinking. And I put that out every single day from Monday to Thursday. And, then we're at least, you kind of get up to speed in kind of what I'm thinking regarding the markets in some very short commentary. This is one of the trades we put on for the QQQs and the SPYs towards February and March. I mean, this is already well in the profit. We took that on December 20, so we were kind of getting ready as the move was kind of finalizing into the stocks, and we put that on, kind of reading the chart and getting ready for this move to the downside in this kind of corrective pattern. And one way to take advantage of that is some debit spreads, or you can buy straight puts, but I like to to sell calls against it. It's a little takes a little bit less money, and you got some protection, and it works a little bit better because puts decay so quickly, so and calls for that matter. But yeah, go ahead and read this up and subscribe if you haven't done already. So anyway, I'll leave it at that. Thanks for watching. As always, I appreciate you, and I'll see you next time. Bye.